and then I'll talk a little bit about jumping the SBA. 3 years ago, I said roughly two and a half, there was an abundance of credit, and today there's very little or no credit unless you have a lot of capital. I talked to a community banker, as I mentioned earlier, Friday for lunch this past Friday, and I've sensed that in the community. I mean, a lot of it's because they claim regulators and they're putting pressure on their capital. And, as you know, most banks are leveraged 10 to 1, 12 to 1, whatever it is. What's your thought on that statement? Do you think that's the reality today that most small businesses find themselves in, where there's little or no capital available other than, they put up a $1 million CD to get $1 million? I mean, how far is that off? Or is it?
Well, I know that things are difficult around the country and for many small businesses and banks as well. I can only refer to my bank and the experience that I have, and that's not exactly true for our bank. We increased our business loan totals, and now we're working with a fairly small base, $310 million in loans.
You lend in Florida?
We don't lend in Florida,
okay.
But we increased.
Folks to you.
We stick with our market area, and very consciously. But we increased by 8% our loan totals in 2008, and year over year to June, we're up 5%. We anticipate we're budgeting another 5% through the end of this year. So we've just hired 3 lending officers, 2 of which are managers of branches and lending officers, and another's a commercial lending officer. So we're open for business, and we're making loans and just the replacement, to replace the pay down of the existing base requires quite a bit of lending. We're closing about 100 new deals a month in our small bank.
How has the criteria changed? Let's put it a little different way for the bank in 3 years. How you look at a loan 3 years ago and what you might look at today.
We believe that good business credit underwriting is good business credit underwriting. We haven't changed. We're using the same standards we used for the last 10 years, and we will continue to use those same standards going forward. A good deal is a good deal, and a good deal today is no different than a good deal yesterday.
Yeah, and I think probably regionally, different parts of the country, because every bank will say the same thing, just what you said. Yeah, if I find something that meets the criteria, but the problem is, everybody had a pretty rough 08. 09 isn't much better. So it's the banks, the underwriting's a higher standard, and yet you can't find a lot of those companies making that. Let me jump over in terms of the SBA. You've got this 90% guarantee. Why doesn't more banks take advantage of it, in your opinion? Because it sure seems to me, it would be a great way to get more capital out. The banks are guaranteed 90%. I know it's not 100%, but 90%. We'd want to have the banks have some sense of obligation, some risk, and because it's the taxpayers' money. Well, why don't we have more banks? And I got to tell you, in the 80s, I was completely frustrated. We were trying to help people get loans through SBA, and it was just aggravating, cumbersome, took forever. The bureaucracy, there's not enough in it to make it work because of the energy you got to put in to get one. But that was, I'm hopeful that gets better. And the reality of it is we need to get more capital out there for small businesses. But I was just curious, your experience. I don't know if is your bank using it, and if it is, what's been your experience?
Yeah, we've been an SBA lender over the years. We have not used SBA 7A in recent years. We are an active 504 lender. One of the reasons I think SBA 7A grew in volume and now has fallen in volume is because of the liquidity issue. Banks used 7A loans to create liquidity, because if you have a 7A loan, there's a ready market to sell the loan and replenish the funds back into the bank. And liquidity issues right now aren't what they were 2 years ago or even a year ago. Banks have more liquidity today for a number of reasons. So they're not seeking the SBA 7A participation. The underwriting standards are still the same. If you if you write a 7A loan, it needs to be a good loan. You can't make it a better loan by putting the guarantee. You can't make a good loan out of a bad loan by putting a 7A guarantee. And the SBA works with the bank. They're good underwriters there, and they agree with the underwriting conditions. So right now, banks have liquidity. When they can make a loan, they will make a loan. If the underwriting criteria are there, that loan will be made. And in most cases, the bank doesn't need the 7A guarantee to make it a good credit transaction. So I think right now it's primarily liquidity is causing the downturn.
Thanks. Ms. Lehman, I was going to ask, what is the profile of a person that walks in for a microloan? I mean, tell me what that person, I know they're entrepreneurial. I've had some people ask me about it. I've seen it where people said if I can get $15,000, I can set up my sprinkler company or whatever. I just need some seed money. But I was interested because I'm not sure I have the right impression, but I'd be interested in your thoughts on that.
Thank you for the question. And the average entrepreneur who comes into our business or comes into the microloan intermediaries and requests a loan are low income, low and moderate income. They increasingly more are looking to self-employment because they've been laid off from a job. They have business ideas, but they can really benefit from business coaching, business planning assistance, getting their credit score all set, and then helping them develop their business plan. We tend to give the microloan intermediaries provide credit primarily to women. Over half of the loans are made to women. African Americans, Latinos, Asian Americans, and Native Americans. So the microloan intermediaries are serving disadvantaged populations.
And let's say someone comes in for a microloan for $20,000, you approve it, and then they come back a year later, 9 months later, and need another $15,000. Normally, most people that I've found over the years that go out of business, they run out of capital, and they got to shut down. Maybe if they had a little bit more, what is the possibility of that?
The microloan intermediaries are very flexible and work with the credit needs of whatever the entrepreneur is, and in many cases they come in with smaller loan requests and then pay that back and build it up. We're actually seeing that you can, if you've been paying and you're in great shape, you can always come back for more loans up to that $35,000 maximum, of course. But what we are seeing now is part of the goal of the microloan program is to move these entrepreneurs into the mainstream financial sector. And what we're finding is a number of those entrepreneurs we thought were working with the various banks and commercial banks are now having difficulty in coming back, that their lines of credit have been terminated. And so they're coming back to the micro lender and trying to get as much of the loan as they can.
And then in terms of, one last question, in terms of, you mentioned that line of credit, how do you term out a line of credit? I mean, obviously it's paying interest on the outstanding, but what kind of a terms when they come in and sign up for a line of credit is that? Is that a 1 year deal and then it resets, or do you ideally want it paid off, or does it term out after interest only for a year, then a 5-year amortization, or what do you do?
The microloans right now are typically 3 to 6 year loans. They're not lines of credit. That's one of the things we're hoping to see in the reauthorization is more flexible uses for lines of credit, so that folks, especially folks like air conditioning repair services that are seasonal, aren't saddled with a 3 to 6 year loan.